Hello, this is Dylan Langei, branch manager and home loan officer at Evergreen Home Loans, coming at you with the June mortgage update. You're either seeing this from social media, you're on my email list, we've done a deal before, you're a client of mine. So thank you so much for tuning into this. Hopefully, this one will be power packed as I aim for all of my mortgage updates to do. We'll talk about, quick little nugget of the month, how I'm creating wins for my clients in this low inventory market, and how I'm also creating inventory for my clients as well. We'll talk about rates, internal turn times, and kind of what mortgage applications are doing, where we're seeing rates and the direction that they're going, and also what our true problem is right now, especially in Whatcom County, which is the lack of inventory. We're seeing that in many other markets. Before we dive in, make sure if you're watching this on YouTube, do hit that subscribe button so that you are pinged on any new updates, any new videos. Also, if you go to WhatcomHomeLoans.com, which is my website right here, if you missed a mortgage update, you can find it up here in the resources tab or any other videos that I have done. Just great resources there. On the YouTube channel, which once again is Whatcom Home Loans, at Whatcom Home Loans, you will have everything categorized. So any loan products that I allude to in this video will be right here. We've got our fastest cash, our buyer booster, security plus, step up program, seller buy downs, and many, many more. Also construction loans will be down here in the construction loan playlist, and then monthly mortgage updates if you missed any of those. Alrighty, let's jump right into it. So hopefully you got this PDF, or if you're finding this video on social media, just email me at dylan@evergreenhomeloans.com and I will be able to provide this for you. But let's start with the quick nugget. How am I creating inventory and wins for my clients in a competitive market? So right now I'm hearing a lot of people say, oh gosh, I'm going to wait for the market to crash to buy a house. I'm going to wait for mortgage rates to go down to buy a house. It's home affordability. I'm even hearing business partners, gosh, no one can afford a home. So that's why that's why the market is slow. Well, I'm going to argue the market is slow because of lack of inventory. There's many reasons that we have lack of inventory. We all shot ourselves in the foot by offering out 2.75% interest rates. So the motivation to move is not as great as it used to be. When rates were 2.75, everyone wanted that bigger and better house because they were working from home during COVID. Now we just have a massive lack of inventory, and I'll dive into that. But how I am personally creating inventory and wins for my clients in this competitive market are a few things. So how I'm creating inventory is I work with a handful of just amazing real estate agents that are beating the pavement every single day looking for inventory. They're talking to clients, they're talking to homeowners, they're talking to their database, their friends, their sphere. They're in their office as well, hearing about upcoming listings. There's a lot of sellers out there that would sell, but they don't want people trampling through their house. They want an easy sale. Maybe they have tenants in the house till August. There's a lot of opportunity in this market. And so what I'm doing is I'm asking my business partners, do you know of any properties that are coming up that may fit what my clients are looking for? I'm trying to create some off-market opportunities so that my clients do not need to compete in multiple offer situations. Currently, I have 17 pre-underwritten clients. My branch, my 12 loan officers have over 175 pre-underwritten clients. What that means is that we've reviewed their credit, reviewed their income, reviewed their assets, sent it through processing and underwriting, and got them a full underwriting approval. 175. That's just one office in Whatcom County, right? Extrapolate that over however many mortgage offices are also here. There's a lot of pent-up buyer demand. Buyers that are raising both hands, both feet, saying, I want to buy a home. So we need to create inventory. We need to beat the streets. We need to get out there. So I'm doing my part to create that inventory. I have a list of over 30 properties that I know of that are potentially coming on market, and I'm trying to play matchmaker. Right? I keep joking that I'm Hitch. So if you're somebody that is maybe looking for a specific property or doesn't want to sell because they need to buy, the perfect home, reach out to me and I would be happy to look through my list, look through my resources, and do some digging on your behalf to try to find you something. how I'm creating wins in a competitive low inventory market. So like I alluded to, we have 175 pre-underwritten clients. If you are a buyer out there and you are not pre-underwritten or you don't know what that means, contact me. What many of my buyers have right now is 3 pieces of documentation that are winning them offers above and beyond. The typical buyer has a pre-approval letter. Pre-approval letter is as good as that loan officer's word, right? It just says, hey, Dylan Langei is approved to $500,000 with this amount down. Okay, great, right? A loan officer's reviewed their income, assets, and credit. But what I've done is fully pre-underwritten, once again, 17 of my clients, 175 on the branch level. This is what this looks like. And this is why our clients' offers are being accepted over cash offers, over offers that have higher prices. My clients are winning on those offers. It's, once again, these 3 documentation and then personal reputation. You want a local lender that knows the real estate agents. The sellers are familiar with the company, with the name, right? So this is what my personal pre-approval letter looks like. Has my information on it. It would have the borrower's names, right? Dylan Langei. It'd have the date, the address of the home, the loan product, and the down payment. Okay. Every pre-approval letter, though, has a get out of jail free card. And the listing agents and sellers know that. I also, though, include my testimonials because I want that seller and that listing agent to know why I'm the #1 rated lender in Whatcom County. So if they click this link, it goes to my testimonials page, which has all of my Zillow, experience.com, Google reviews, everything like that to show them past client reviews. Okay. And then I include a little bit, reviews here as well, just to show them, past real estate agents, what they thought, past clients. We look at reviews when we book a hotel. We look at reviews when we book, we go to a restaurant. Why wouldn't we look at that as a seller and a listing agent if you're trusting this lender to secure the financing for a buyer that you don't know anything about, right? It makes sense to have online reviews and to review those. The second piece that we're doing is called our Security Plus program. As I alluded to earlier, there's a full-blown video on the Security Plus program, so I'm not going to go too much into this, but it's basically a guarantee to the seller that if something happens to their finances, credit, income, and assets, and they've been pre-underwritten with us, we will pay that seller $5,000 from Evergreen if that financing falls through. What a security blanket for that seller, right? That's one step further. And then our brand new program is our Fastest Cash, which requires the Security Plus approval. So once again, there's layers to this. This requires the Security Plus approval. It's a guaranteed close in 10 days, no financing contingency, and no appraisal contingency. So to a seller, this is as good as cash. It is a loan, and then we refinance the client out of it. Once again, full-blown video on Fastest Cash. But once again, 17 of my clients have these 3 forms. So if you're someone that just has a pre-approval letter, or maybe you're a real estate agent that has a buyer that just has a pre-approval letter, this is what over 175 clients at Evergreen Home Loans have at their disposal. They're going to win those offers on those competitive properties once we gain a little more inventory. Okay? Reach out to me if you have any questions on those. Okay, let's talk about rates. So the mortgage rate trend we've seen is going up. Mortgage application trend is down. I put mortgage rate trend as up in red because it costs more money, right, to borrow money. And then mortgage application trend being down, as a buyer, less competition, right? So look at mortgage rates, and I always do it over the last month. So right now I'm shooting this, it's June 4th, May 4th. The average rate I always look at Freddie Mac's data, was 6.39, was the average 30-year fixed rate nationally. Now we're up to 6.79. A lot of that has to do with the debt ceiling, which we've gotten that hopefully figured out. Sounds like that's signed around, and we're going to start seeing rates trickle down. There's a lot on the Fed's increasing, the Fed's funds rate. It was a 70% chance that they were going to increase it. That has now That has now flipped to a 70% chance that they're not going to increase the Fed's funds rate because we're starting to see inflation moving down. CPI came out, which is a consumer price index, at 4.9%. We saw that at its height in June of 2022 at 9.1%. So we're seeing inflation come down, which is the Fed's main goal. They want to decrease inflation. Their goal is to get it to 2%. We're now seeing that right around 4, right? High 4s. Why is inflation tied to mortgage rates? Well, if I have $100 and I'm going to invest that money into mortgage-backed securities, which is what drives interest rates, the Fed's trying to protect the pricing of mortgage-backed securities. If mortgage rates are 2.75, so a mortgage-backed security, let's just say, is paying 2%, but inflation is 9.1%. Why, as an investor with $100, why would I buy a mortgage-backed security at 2%? I would lose 7% because inflation is 9.1%. So that's why mortgage rates and inflation is pretty closely tied together. So once we pass, the Fed always looks 12 months back. Once we pass June of this year, which we're June 4th, I think July 13th is the readings for June. A lot of people I follow, Barry Habib, Bill Bobner, are thinking that mortgage rates are going to start trickling down. However, my big sounding the alarm, putting up the flag, whatever you want to use for this, when mortgage rates come down, you are going to see the pent-up buyer demand explode. We already have a ton of buyers ready to go. If we have mortgage rates drop to high 5s, which is what a lot of the experts are guesstimating in the next few months, we are going to see the buyer pool double, triple, quadruple, which means more competition. Doesn't necessarily mean we're going to have more inventory pop up, because once again, a lot of those sellers have a 2.75 rate. So if rates drop to 5.75, I don't think that moves the needle enough for those sellers to move on. So mortgage applications, you've seen them go down. This is weekly, but this month in May, they have gone down 5.7%, 4.6, and 3.7. Okay. Why I think I keep hearing I'm going to wait for the market to crash. I'm going to wait for, right? Once again, there's national data and then there's hyper-focused local data. So you need to look at both, and it depends on what market you're in. But when I hear people saying I'm going to wait to buy a home when the market crashes, I know that they're alluding to 2008. This is nothing like 2008. Ask anybody that was lending in 2008, bought a house in 2008. We have totally different problems here. Let's look at just months of inventory, because if you're looking at I'm going to wait for the market to crash, that means that we have an absolute surplus of inventory and not enough buyers. What I'm seeing, someone who's in the field, is we have a lot of pent-up buyer demand and not enough inventory. So post-crash, our height of months of inventory was 12.2 months nationally. Okay, that means that if no other houses got listed, all the houses would be bought in 12.2 months. Right now, we're at 7.6%, and it's dropping from our height in July of 2022. What happened in July of 2022? Mortgage rates went from, right, I think it was around March of 2022 to July, we saw that huge spike in mortgage rates. Let's look back at that. Let's look back. July, I have to move my big face. Right? Look at this hike. So this is just June, but we saw them go to 5. That was the first peak, right? So if we look 3 years back, so look at this, March of 2022, really they started hiking in December, but March of 2022, we're in the high 3s, which we'd all love to go back to. We saw those jump to 5.75. So right there, that's why we saw our months of inventory pop up. Now we're seeing it start to go down. People got used to these mortgage rates. 2.75 is out of people's heads. This is nationally. In Whatcom County, I think we're somewhere around 3 months of inventory. So even less. So once again, if you have people telling you they're going to wait for the market to crash, let them wait. I think now is the time to buy, depending on your scenario and your personal situation. Because the minute mortgage rates drop to high 5s, we are going to see an explosive amount of buyers jump back into the market, jump into the market for the first time, and we are not necessarily going to see a massive influx of inventory. Okay? So looking at mortgage rates, we've seen them pop up. If you watch my video from last month, this 6.25 costs you a point. So these are a $700K purchase price with 10% down. 1 point is equivalent to 1% of your loan amount and a closing fee. So on a $630,000 loan amount, it'd be $6,300 to pay a point. 6.25 was a point a month ago. Now it's 2.25. So it's almost doubled for the same interest rate. So rates have doubled. The cost for the rate has doubled. But once again, you're seeing buyers' applications go down. So if you're somebody that needs to move for one reason or another, now is a good time to pull the trigger. If you're happy in your house, you have a 2.75% rate, by all means, stay. But if you're somebody that needs to move or is renting, now is the time to jump into the market. Rents have gone bonkers. I just redid all my leases with my rental company, and we saw massive increases, and all of my properties are getting signed over. You see a lot of those leases get renewed around August, September, because that's when the college season happens. So a lot of renters right now are also getting notifications on how much their rent is going to increase. That is another reason we are going to see more buyers pop into the market here in Whatcom County. So I'm raising my alarm, the flag. So internal turn times, processing and underwriting is about 5 days. We can, because 2 days for processing, 3 days for underwriting. That means that it takes about 5 days to get these certificates that I talked about, the Security Plus and the Fastest Cash. So get your documentation in earlier than later. Everything else is about a day. We can close loans in about 2 to 3 weeks if we really need to expedite things. Appraisals are taken about 5 to 8 days in Whatcom County right now. So ability to close very quickly. Once again, we are seeing a huge amount of pent-up buyer demand. So if you are not pre-underwritten or your clients are not pre-underwritten with the Security Plus and the Fastest Cash option, I strongly suggest that they get that done. Those are both good for about 4 months. So once again, once we start seeing mortgage rates start to trickle down, we're going to see a lot more buyers jump into the market. And fingers crossed, we see some more inventory coming soon. All right, I'll catch you next month. Once again, do subscribe to this YouTube channel so that you stay up to date on these monthly mortgage updates and any other product videos that I launch. And check out WhatcomHomeLoans.com for more. Thanks, and we'll see you next month. See ya.